Have you ever wondered what happens behind the scenes after a business decides to buy insurance? Let's start. How does a submission becomes a policy? Who evaluates the risk? What happens if the insurer declines the risk, and how does the policy eventually reach renewal? In this video, I will walk you through the complete commercial insurance policy lifecycle from a business contacting a broker all the way to claims and renewal. The key stakeholders is the customer, the business or the insured, broker or agent, which is a bridge between the business and the insurer, and the last stakeholder is insurer, the insurance company. Let's get started. So everything begins with a business. A company may need insurance because its own building, manufacture products, provide services, or wants protection against lawsuit and financial losses. So instead of approaching multiple insurer individually, the business often contacts a broker. The broker acts as an advisor and helps understand the company's risk, coverage requirements, and issuance need. Think of the broker as the bridge between the business and the insurance market. Once the broker gathers the required information, they prepare a submission. These submissions may include business operation, annual revenue, the number of employees, property values, previous claim history, or risk management practice. The broker then identifies the most suitable insurer carrier based on the type of risk. For example, a manufacturing company may require a different insurer than a technology company. The submission is then sent to the selected carrier for evaluation. Once the submission received by the insurer, right? Then now the underwriting process begins. The first step is the submission, the submitting the basic informations, operations, loss history, risk details of the business. Then the insurer's underwriter review the submissions to determine whether the company is an acceptable risk. The underwriter evaluates industry type, loss history, financial stability, safety controls, and exposure to potential claims. The goal is simple. Can the insurer profitably insure this risk while maintaining acceptable level of exposure? Based on this analysis, the underwriter makes a decision. The underwriter generally has three options. Option 1, accept the risk meets underwriting guidelines and can proceed. Second, modify. The insurer may require higher deductible, lower limits, additional conditions, or risk improvement by business. Third, the decline. The insurer decides the risk does not fit its appetite. If the risk is declined and no alternate market is available, the submission becomes void and the process ends. If accepted or modified, the process moves forward. The insurer communicates its decision back to the broker. This includes coverage offered, limits, deductible premium indications, and special conditions. The broker reviews the proposal and prepare to discuss it with the client. Once underwriting is complete, the insurer formally issues a quote. The quote contains the following informations. For example, the coverage details, policy limits, premium amount, deductibles, terms and conditions. The broker receives the quote and explains it to the business. This step is critical because commercial insurance policies can be complex and the broker uh, helps the client understand what is and isn't covered in the policy. The business now review the proposal. Uh, the client may accept the quote, request change, negotiate terms, or seek alternate options. These are the typical the options for the business, right? And if changes are requested, the broker may return to the insurer for revisions. right? And if the quote is not approved or it's not in line with the business, then the quote may be declined, right? In that case, the submission status can be changed to the NTU, like the not taken up. So once the business approves the quote, the policy can move toward issuance. So after acceptance and the premium payment, the insurer issues the policy. The policy becomes legally active. However, the life cycle does not stop here. Throughout the policy term, servicing activities occur, such as endorsements, address change, new locations, additional equipment, increased revenue, coverage modification. So these are typical type of endorsements usually occur on the policies. As the business evolved constantly, the policy must evolve accordingly. So at last, if a covered loss occurs, the claim process begins. Examples: property damage, fire losses, liability claims, theft, business interruptions. The claims team investigate the loss, confirms coverage, evaluate damages, and determine the settlement amount. This is where the insurance promise becomes reality. A policy's true value is often demonstrated during a claim. As the policy approaches expiration, the insurer or broker sends a renewal reminder to the broker or the policyholder. The account is reviewed based on claims experience, business growth, changes in operations, or market conditions. A renewal quote is prepared and the life cycle starts again for the next policy term. So this is what the typical commercial insurance policy life cycles. So that's the complete commercial insurance policy life cycle, from identifying a risk to the policy issuance, servicing claims, and renewal. Understanding this life cycle helps insurance professional and brokers or business owners see how every stakeholder works together to protect business from the risk. So what we covered in this, like the risk identification, submission, underwriting, policy issuance, policy administrations or servicing, claims, renewal, and the role of reinsurance as well, which is more as behind the scenes. So if you found this video useful, please like and subscribe and share it with others interested in insurance. Also check out my other videos covering underwriting, claims, distributions, and reinsurance in the insurance value chain. Thank you.